Welcome back, everybody. It's good to have you to another real estate market update for the greater Milwaukee area, this time August 2025. We are already in the middle of the third quarter, and of course the big headline is the US housing markets across the board continue to soften. How is that impacting the Milwaukee market? We'll take a look at the data here today. Then I want to talk about something that may surprise you. Most people still think that spring is the best time to buy a house. Here's your annual reminder, that is not the case. Let's take a look at the data and the differences between the spring market and the fall market and why August through October are every year the single best time in the Milwaukee area to buy a house. And then, of course, we had some big economic headlines in the news last week about the labor market. So I want to take a quick look at what's going on with the economy and how that is impacting the real estate market in the next few months here as far as we can see. And finally, something that you may have seen popping up on social media, and that is increasing electricity bills. What's up with that and what's going on in Wisconsin? Quick look at that too. But first of all, the big headline is the softening real estate market. Zillow came out with the new 12 months forecast, and they're predicting real estate prices across the US softening minus 1%. The interesting thing is some context here that started actually early in spring when they were forecasting minus 1.9%. Then they revised it to 1.4%, and now we are at minus 1%. So they're getting gradually a little less pessimistic about what's going on. Here you have the visual picture about what happened in the last 12 months. And what you can see, the hardest hit markets were really down here in Florida with almost minus 12% here on the coast, and then Texas, and we've also seen a little bit of softening across the Sun Belt and going up the West Coast. The Midwest and the Northeast market have been relatively strong. This is for the last 12 months. Now here's the new forecast from Zillow, and they're basically predicting that Florida is going to ease off a little bit, but Louisiana is going to go down quite a bit actually. Texas still under pressure, and more pressure here along the West Coast. But what's also changing, a lot of the Midwest and Northeast are going orange and red now. Milwaukee is actually called out here with minus 1%. So a lot of experts are commenting on this, and they're saying, how does Zillow really factor in those local inventory supply and demand trends, and are a little bit skeptical with that. And I'm on board with that because when I look at the data, I would be very much surprised if we are seeing Milwaukee values decline, even though minus 1%, I mean, it's basically flatlining. But based on what we're seeing today with supply and demand, I would be surprised if we see that. And here is why. Let's take a quick look at the latest data right out of the MLS. Here's inventory for July. That's up 30.5%. So that would certainly indicate more supply and less demand. We have 1,944 units for sale, and that is still quite a bit more than what you see below. Before COVID, we had about 2,800, and in July 2015, it was over 6,000. So that would be a normal market. So in comparison, still relatively low inventory. What's really remarkable is how few transactions are. So we have very few buyers, very few sellers in the market right now. When they come together, they're closing a deal 1,190. That's slightly down, and that is significantly less than what we typically see in a summer month. And there's a number of reasons. Consumer confidence plays into that. We'll talk about that a little bit later. Also mortgage rates. So all of that comes down to a very, very small transaction market. But nevertheless, and this is kind of the conundrum, still very high velocity. So a lot of deals are still selling in 2 or 3 days over the weekend. The median is 5 days. And median sold price is up, but not as much as I would have expected it. So last month we have seen still a plus of over 7%. For July, we were only seeing a plus of just under 3%. So that is one of the lowest numbers we have seen here in a long time in terms of an increase. But when you look at the big picture, zoom out, go back 10 years, you have the number below. Real estate prices in Milwaukee have almost doubled over the last 10 years. So kind of a mixed picture here. We'll keep an eye on the data. What else have we been observing in the market? July has been softer in all price segments. So that is more of a market sentiment thing. It seems like a lot of the market participants are a little bit guarded, and we've seen that throughout the market. When you zoom out on pricing and you look, instead of just looking at 1 month, you look at year to date, then you also see prices slide. We still have a plus of 6.1% year to date for the Milwaukee metro area, but that is less. We used to be around 7-8%, so because of the July number, this is coming down. August and October, as I mentioned in the intro, are always the best month to buy. This trend has, as long as I've been doing this for over 10 years, this has always been the case on the buy side. Still a pretty good market to be a seller as well, especially the back to school time. But it's definitely a very different dynamic than it has been in spring. Hot listings continue to sell competitively. So that's a little bit of a conundrum, because we're seeing it going one or two ways. Either stuff is sitting around and is not moving at all, or it is moving very, very quickly. And on the second and third tier listings, so either not a great house, not in great condition, needs work, and or is overpriced, sometimes both, there is a lot more room to negotiate right now than we have seen in previous months. Another big trend that we're seeing is there are a lot more cash offers that we've seen historically. I took a deep dive into the data. Currently, 1 out of 5 offers is a cash offer. That's about twice as many as we've seen in the past. And I think there are really 2 reasons for why we're seeing this happening. One is just a financial consideration. When you look at mortgage rates versus stock market returns, a lot of investors are growing increasingly skeptical about how much upside there is in the stock market when you look at current P/E ratios. And August, September have always been a volatile time traditionally in the stock market. So they're looking at the risk exposure there, and then they're looking at mortgage rates, and they're like, I'd rather move my money into real estate. The second thing is, I think a lot of people are doing it just for competitive reasons. It's still a very competitive market on the North Shore, in Mequon, in Cedarburg, in Wauwatosa, and Brookfield. And they're putting in cash offers, even though they're later closing on with financing. So there are multiple different ways how to structure this to make an offer as good as cash, or quasi-cash offer. And that's a very popular strategy that we also use quite a bit with our buyers. Speaking about getting offers accepted, we are currently celebrating 500 closed transactions for On Point here in the Milwaukee area. And the reason I'm bringing this up is we are learning from every single one of them what went well, what could we have done better. In July alone, we had 13 closed transactions. And so that is current market knowledge that we bring to the table, whether you're buying or you're selling a piece of real estate. And if you have worked with us in the past and you were happy with us and want to send us a family member or a friend to have an equally good experience and draw off that experience, then you have my contact information here on the screen. Actually, I'm hoping you still have my phone number saved. So just give me a call and I promise we'll take good care of them. Let's get back to the data. Milwaukee inventory is increasing. So let's take a look here at the blue line, which is total inventory. And you can see how that is really jumping up. At the same time, the red line is new supply that we're getting every month. So that is still kind of elevated. So we're getting still a good amount of inventory coming in. But this is the first month where we have seen more inventory total on the market that we have seen at any point in the last 12 months. And so you're creating a situation where you have fewer buyers in the market, but at the same time you have more listings. So the buyers get diluted over more listings. And that, of course, means a less competitive market than we typically see here in the spring market. Let's take a look on how competitive the market still is. This may surprise you. We are still in a very, very hot competitive market here at 102.3% sale to list ratio. So if you're not familiar with this ratio is giving you how much on average a buyer has paid for listed real estate. So historically that has been as low as 95, 94%, but at the moment on average people are paying 102.3% off list price. So how does that make sense when the market generally is softening and we're still seeing a number so high, even though it's coming down a little bit? The reason is we really have two markets. So the data that goes into this is our only listings that are getting under contract. Let's take a look at what mortgage rates are doing. So we are currently still under 7%. Not much new here. So we have been in this sideways trend here all the way back to 2022. 30-year fixed here is 6.72 on average. And then I also have the line here for a 15-year, and that gap is growing bigger and bigger. So so if you're looking at an example here, I have $400,000 purchase with 10% down. On the 30-year, you're looking at a monthly mortgage payment, PITI, principal, interest, taxes, and insurance, of 2,918. And on the 15-year, because it is paid off in half the time and has a lower interest rate, you're looking about, what is that, $600-700 more. So depending on your personal situation, that might be worth a consideration, because there's actually quite a bit of a gap here, and it may not be the worst thing. Of course, you can also play it conservative and use a 30-year fixed rate mortgage, because you can then you know that you have the low payments locked in, and you can make an extra $600-700 payment, and that will eventually lead you to have it paid off in basically half the time. The problem with that is that you're still getting at a little bit higher interest rate. So based on your situation and your risk tolerance, two options to consider. And we usually have a very in-depth conversation about what mortgage product is the right one for you, how much down payment do you need, etc. So that's all part of our onboarding process when we're working with a new buyer. I mentioned earlier that August through October are the single best time to buy here in the Milwaukee area. We have a very predictable, strong seasonality. This is the median sales price for the Milwaukee metro area all the way back for the last 10 years. And you can see it's a very reliable pattern, repeats every year. And we have the price peak typically in June, and then the lowest price in December and January. And the best time to buy is typically here on the downward leg. And here's the reason why I'm saying this. So when you look at inventory, from a buyer point of view, of course, you want more inventory, you want more opportunities, more houses to choose from, which also means less competition. And ideally, you want also a good quality of inventory. And you can see the total inventory, that's the blue line here, this is 2024, is really the highest of the entire year in August, September, and October. So hands down, you have the most choices. And that is true for every year. Even if you go back to 2019, you can see we had more inventory overall compared to what's coming new on the market. So over 3,000 here. But the highest selection, the most choices of inventory you have in the second half of the summer and then into the fall season. And you also have a declining competitiveness. So typically, here's the pattern from last year, the list to sale ratio is continually going down towards the end of the year. Now, why would you not want to buy in December and in January? I can tell you why. Because most of that inventory that has not sold at that point is basically leftover stuff and junk that nobody wanted in the first place. So for investors, there's some deals to be had at, but you're typically running out end of October. The new listings are just going down very, very low, and there's not that much that is worth buying to choose from. That's why. If you're interested in buying, download our new homebuyers guide. It's available on our website for free. I think it's 24 or 26 pages, and I've put everything that is important about the process, step by step, how you buy real estate in the Milwaukee area. Some things are specific to our market, how that works step by step, what the best strategies are, some tips and tricks for home buyers, and you can download that on our website, onpointrg.com. You can also send me an email at m.auerbach.kw.com. A lot of people seem to prefer that. Or if you want to, send me a text or give me a call. Just don't be surprised if I actually pick up, because that's what I do. All right, let's take a look at what's going on with the economy. Last week, we had some headlines from the job market. And of course, that is very important for the real estate market. If people are worried about their jobs, they're less likely to move, to buy, or to sell a house. They just hunker down. But I'm always a big fan of zooming out and looking at the big picture to understand what's really going on in the economy. And I have here two charts that I overlaid. I think that helps with a better understanding where we're at. You have here in red unemployed people, and you have here open jobs. And that goes back all the way to the 2008 recession. So we had a job shortage at the time. We had about 15 million people chasing about 3 million open jobs. And of course, that was a rough time. Some of you may still remember. Then these two lines came close together. Forget about COVID for a second, because that was an external situation. But we have entered a phase of where we had a labor shortage. So we had more open jobs, especially in 22 and 23. You remember, more open jobs than we had unemployed people. And now these two lines are coming together. But the sky is not falling, at least not at this point. So when you look at that, there are no real super negative signals that we can see from the labor market. Let's take a look on what's going on with inflation. 2.7% was the latest reading in July. And yes, that is ticking up here. You can see that it remains a concern for the Fed to maintain value for the US dollar, that we don't get runaway inflation here again like we had it a couple of years ago. So when you compare inflation where we're currently at with what we have seen historically, I would say it is not too worrisome at the moment. But of course, it is something to keep an eye on, and it does impact consumer confidence, which is the last slide I have here. So we have here two lines. One is the present situation confidence. So that is still pretty okay. People are still feeling pretty okay. But when they're asked about the expectation for the future, that is dropping below this yellow line. The 80 mark on that index is concerning because that indicates usually a recession. At least this is what the conference board is telling us. And it dipped here really low, below 60 actually in spring, and now it has recovered, but we're still below the 80 line. So consumer confidence is not great, and that is actually impacting the real estate market. I think that's one of the main reasons why we are seeing so few home sellers and home buyers at the moment, because people don't want to make a move. They want to see how this shakes out with the economy, what's going to happen to give them confidence in order to plan their next move in life. Something else that I wanted to share with you that is popping up on the internet, and those are concerns about electricity and gas prices increasing. You see a lot of videos on social media, people holding up the energy bill and saying my electricity bill has doubled. I don't think it is that dramatic, but summer electricity prices have gone up 22% in some states because electricity gets auctioned off wholesale. And that wholesale price, for a whole number of reasons, I'm not going to get into that, it has gone up 22%. And of course, that is impacting a lot of markets, especially Illinois. We see a lot of really upset people with the electricity bill in Illinois. In Wisconsin, it looks a little bit better. So we have an official policy. We Energy needs to actually get approval before they can raise energy costs. And you can see here for 2025, they're going up 9.29%, and then next year 8.58%, and you have very similar numbers here also for natural gas. So not something that's impacting the real estate market at the moment, but I think it's worth keeping an eye on energy cost as well. So what can we expect for the next weeks here in Milwaukee? First of all, we're in a summer market, which means it's less competitive. But make no mistake, we are still in a seller's market. It is still the seller's advantage. So we're not in a buyer's market. I want to be clear with that. Supply inventory expected to increase slightly. So you've seen that very clearly on the trend line. So within the year, this is the most choices, the most inventory that we are going to have is right now. Mortgage rates probably flat. We're staying between 6.5% and 7%. We've seen them come down a little bit this week. Who knows what next week is going to bring, but no major changes here on the radar. Seasonality, definitely the best time to buy every year, August, September, and October. You can go back on my YouTube channel. I say this every year because it's just in the data. If you know, you know. Selling, still not a bad time to sell. Target back to school time, especially if you're buying and selling, because the market you're buying is also the market you're selling in. So it's a wash if you're looking at both transactions at the same time. But the strategy really matters, and it's different for everybody. There are a lot of good ways. People always ask me, should I buy first? Should I sell first? There are like 5 or 6 different strategies you can use if you want to have a conversation about what fits the best for your personal circumstances and for your goals. Then we can just hop on a call. You can just go on my website, onpointrg.com, click on book a call with Marcus, and pick a time and a date that works for you. You can see my schedule, and then I'll see you on Zoom. And that's all I had for you for today. Thank you very much for watching, and I'll see you at the next one.